tell you, I'm not a politician, Brett. You're right about that. I'm an entrepreneur. My parents came to this country with no money 40 years ago. I have gone on to found multi-billion-dollar companies. I did it while marrying my wife, Apurva, raising our 2 sons, following our faith in God. That is the American dream. And I am genuinely worried that American dream will not exist for our 2 sons and their generation unless we do something about it. And I do think Brett is going to take an outsider, because for a long time we have professional politicians in the Republican Party who have been running from something. Now is our moment to start running to something, to our vision of what it means to be an American today. If you have a broken car, you don't turn over the keys to the people who broke it again. You hand it over to a new generation to actually fix the problem. That's why I'm in this race, and we're just getting warmed up.
So what do you guys think about that as the presidential debate starts to heat up and the crypto community is reacting to Joe Biden's proposed crypto tax reporting rules? On August 25th, to catch crypto brokers from avoiding taxes, the IRS proposed new rules for selling and trading digital assets, where brokers would use a new form to make tax filing easier and prevent cheating on taxes. Now, the Department of Treasury says that the proposed rules would make digital asset reporting similar to reporting of other assets. However, these stringent rules will push the crypto industry further away from the United States. And if Biden secures re-election, the crypto industry will not flourish in the country. And all of these new requirements are stemming from the $1 trillion Infrastructure Investment and Jobs Act that was passed back in 2021. It also extended reporting requirements for certain cash transactions of more than $10,000 to digital assets if you transferred more than 10K. And at the time the bill was passed, it was estimated that the new law would bring in close to $28 billion over a decade. And where would they send that money? Would they send it to Ukraine? What would they use that for? That's up for debate in the comments below. And the Treasury proposed that the rules would be effective for brokers by 2025 for the 2026 tax filing season. And the Treasury Department and the IRS are accepting feedback on the proposal until October 30th. They will also hold public hearings on the proposal on November 7th through the 8th towards the end of this year. And Ryan Selkis posted on Twitter, said there's no future for crypto in the US if Biden is reelected. Crypto has always been political. And have a nice weekend. So I hope you guys are having an amazing Sunday. We got a lot to discuss with you guys in this video. If you hold XRP, we're getting in the charts briefly. We're talking about the Brics nations. Ripple's XRP is a currency for the Brics. Potential partnership. What would the IMF do? Would the IMF be holding any crypto? Is XRP on the verge of a breakout? And why is Michael Burry betting $1.6 billion on a stock market crash with over 90% of his portfolio to bet on a market downturn? So are we about to see the crash similar to 1929 to 1932? Well, let's find out in this video. So comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping that subscribe and tapping that like button. Let's run it. All right, bull runners, welcome back to the channel. So with XRP sitting at 52 cents right now, $27 billion market cap, Bitcoin sitting just above 26K, Ethereum at $1,653. You know, the crypto market has been consolidating sideways for an extended period of time as we wait for a macro market outlook from what the Fed is going to be doing with their interest rates the rest of this year. Now, if I were to bring up the XRP price chart, we can see a similar chart pattern playing out back from 2014 to 2017 before the breakout took place. Now, this is some minor differences here because where we were in terms of time frame from how long it took XRP to break out from the drop back here in December of 2014, you know, before it passed that, it was roughly 832 days. Now, how far away are we from that right now? So if we were to go, we're pushing 870 days. So 830 days was roughly post breakout from the lawsuit, you know, coming to a conclusion saying that XRP was not a security. Even though the lawsuit's not over, it gave XRP the clarity that it needed for retail investors. And so everyone was expecting a breakout at the end of July. When that didn't happen, you know, it threw the whole market for a loop. And so a lot of people are saying, and what the charts are looking like is we could be potentially right here or right around here right now. However, one thing that's very interesting to note is when we look back on April of 2021 and we saw XRP break below the 50 moving average and also break below the 200 moving average, we saw the 50 moving average and the 200 moving average cross, very similar to back here in April of 2015. We saw the price of XRP break below the 50 and also the 200, and the 50 and the 200 moving average cross. Then once we saw XRP's price reverse and bounce to the upside, we saw 170% rally. Now, what did we see on the right side of the chart right here? We saw 111% rally. Now, one thing that was interesting is XRP could not pass above the 200 moving average, and it got rejected from it multiple times, and it struggled to hold above it. And ultimately, it just kind of bobbled around for a while for an extended period of time in the low. Very similarly, once we saw XRP break from 86 cents and drop all the way down in June of 2022 to form a low of 28 cents, right here is where I'm looking at on the right-hand side of the chart. XRP did something similar where the 50 moving average and the 200 moving average would just kind of wallow around and cross each other along with the price, where it was very hard to know what was going to happen next for XRP. But one thing that was apparent was this upward trending support was holding very, very strong. And so interestingly enough, if we were to look at XRP on the price chart of what could happen next towards the end of this year, as the Federal Reserve continues to raise the effective federal funds rate, we see XRP right now hovering just above the 200 moving average, very similar to right here in December of 2016 when XRP was at the 200 moving average. It broke below it, it struggled to regain it, and we saw one final dip before we took off to the beaches of the moon for that rally. And one dip back within this support range right here that it was all the way back from January of 2016. Now, interestingly enough, as I see this support that acted as resistance back in May of 2022, very similar to October of 2015, this acted as not only resistance right here, but acted as support right here, and it acted as support somewhat. It was around 0.0056 cents, almost a 0.004, but XRP dipped one final time within the support range before coming out of there. So could we see something similar happen for XRP if it fails to regain this resistance of 60 cents? If XRP can't break and hold the 60 cent resistance as support, then I would expect over the next few weeks, this consolidation period sideways of the 200 moving average to break to the downside, dip one final time within this range right here, consolidate for a little bit, and depending on where we are on the chart, it will determine if XRP is going to break out from this range right here, or if we're going to have one final fake out to the lows of June of 2022 based on the stock market news that I'm going to bring to you at the end of this video on what Michael Burry is betting on. So one of two scenarios I feel will take place. But I do feel, I know a lot of people I'm going to get a lot of hate for this, and I'll explain my logic on this throughout the course of this video, but I do feel where we are right now in terms of the chart is right here on the RSI on this first point. When XRP dipped all the way down to 24, it signaled that the strength is in the favor of the bears right now. And so if we were to see a rally up with Bitcoin, I would expect XRP to rally up to the 60 cent resistance, get rejected from that, come back down, and then ultimately see one final drop back down here. So interestingly enough, we saw something similar happen right here on the chart where we saw the RSI go from under 30 upwards of 58, and we saw a rally back up to the 50 moving average, the 200 moving average, and then one final drop down. So I would expect something similar to happen for XRP and then a bounce from this range. Now, if the pandemic the second pandemic that they're planning on this year's, where they're going to be ushering in some new form of population control that they plan on doing, because they want to reduce population. That's the globalist plan. Everyone understands that. Virtually everyone agrees. Nobody disagrees. The people that disagree, they're just not paying attention to what the globalists are doing. And so what the globalists are planning on doing is one final shakeout event and then shifting to a digital economy by 2025 and then to 2030. And so that's part of the Green New Deal that they're working on. And so I would not be surprised if they shake out XRP one more time. And then the retail investors are going to be blaming everybody, except for the globalists. They're going to say, oh, this was your fault. You said that XRP was going to go up. Listen, I'm not giving you any guarantees on what's going to happen with XRP. I'm not saying buy XRP. I'm not saying sell XRP. This is not financial advice. I'm just sharing with you what the elite want to do. and they want to not only shake you out of your position, but they want to shake the population out of their lifespan. And basically, sounds crazy, but they want a lot of people gone. I'm not going to get into too much of that. So I would expect something like this to take place for XRP, where we see one final dip down and then a shakeout event take place. Now, how low that shakeout event will go, I don't know. It could come all the way back down to 29.30 cents. I don't know if it'll go that low, just because the long-term holders for XRP are too strong. But I do think there will be another dip down to 42 to 40 cents. And I hope that this doesn't age well. And I hope that we do claim the 60 cents resistance as support and we just take off out of here. And then we see an adoption by the Brics nations and the evolution of global finance with blockchain payment systems paving the way forward. And so when we look at this right here, decentralization is at the heart of the blockchain, because people are tired of centralized control, specifically with banks. When you wire money from a bank, it takes 1 to 5 business days. When you ACH, it takes 3 to 7 business days, and not including weekends. So if you do it on a Friday, you're going to have to wait till the middle of next week. And so through this model, through decentralization, transactions are verified by multiple independent parties scattered worldwide. This not only creates a more balanced ecosystem, but it also aligns with the BRICS: Brazil, Russia, India, China, South Africa, Saudi Arabia, and the other countries that are joining the BRICS, their aspiration to offer alternative to the Western-dominated global order, alternative banking. And so the BRICS token, a strategic initial step, would be the creation of a specific cryptocurrency token for transactions within the system. Now, whether the BRICS currency that they're working on is going to be, backed by gold, precious metals, commodities, crypto, or a combination of all of the above, transaction speed is at the forefront, because in the digital world, people want their money fast. And so that's what Ripple is doing with their blockchain technology. And consensus models like proof of stake present an effective solution for validating transactions based on the amount of cryptocurrency an individual holds, rather than computational capabilities. And this reduces energy consumption, expedites transition validation, ensuring quick completions, thereby fostering user trust and convenience. And so interoperability, this is a big phrase that Brad Garlinghouse has used, interoperability, because this allows wider acceptance and readily integrated with other blockchains and conventional payment systems. So Ripple's liquidity hub to be able to allow interchanging of currencies to facilitate mass adoption, offering the value proposition and reduce transfer costs, swifter processes. And so this is massive. Now, one thing that's interesting is a lot of times Brad Garlinghouse gets asked questions, and it seems to me, correct me if you feel I'm wrong here, or like this video if you think I'm right, but it seems to me he wants to tell you guys the truth, but he's not allowed to tell you guys the truth, because this is already planned out and the masses aren't allowed to know this.
All right, with that, we'll turn it over to questions. And I see a bunch of questions on this screen, which I can't really read from here, but we're supposed to pick some. You want to take one? Go for it. The first one's for you. IMF. Do you see IMF holding crypto assets in the future? I did not put that up there.
Remember, I'm from the legal department. I'm supposed to be very conservative about these things. I don't want to go into great details about
Maybe
the IMF.
I should take what the IMF is going to do.
That's-
I think we stunned Ross into silence with that one.
For that to happen, okay?
Okay, right there. Brad, body language. Maybe I should take what the IMF is going to do. And they're laughing like they're buddies. These guys are literally sitting there like, should we tell them? Oh, no, we can't tell them yet. Okay, I'll make up something right now. That's all their body language is saying right now.
Under the current legal framework, some country would have to use a crypto asset as its currency.
Yep. Some country would have to use a crypto asset as its currency. And so that's exactly what is about to take place. And now JP Morgan Chase Bank is forecasting a limited downside for the crypto market. Now, Jamie Dimon, the CEO of Chase, has been so negative about crypto. Now they've completely 180'd on this, and now they're going to start pushing you their crypto products through banking once this starts to shift around based on macro market sentiment with the Fed. And so most long position liquidations have been completing. JP Morgan's latest research is suggesting. And according to Bloomberg report, analysis for the United States-based bank estimates that the liquidations are behind us, and the prediction is based on open interest in Bitcoin futures contracts on the Chicago Mercantile Exchange, indicating that the selling trend might soon decelerate. And so open interest, which refers to active futures contracts, serves as an indicator of market sentiment and the strength of price trends. And so Bitcoin open interest declined in sight. Well, its decline is seen as a sign that the current price trend could be weakening, according to analysts. As a result, we see limited downside for crypto markets over the near term. Now, what would cause a further selling to the downside? Well, it'd be a black swan event, but on the contrary, what would cause a breakout, right? Could XRP see a breakout? 20% gains, is this possible? Well, XRP is currently undervalued. According to on-chain data, the prevailing bearish sentiment across the crypto market is one of the key drivers preventing XRP's breakout. So that's the interest rate hikes, the effective federal funds rate going up. The next Fed meeting is happening in less than a month. As depicted below, the XRP NVT ratio has increased by a staggering 340% from 51.66 to 226 between August 18th and August 24th. Now, what does this mean? Well, when the NVT ratio rises, as observed in the chart, it indicates a steady growth in underlying economic activity relative to the price downtrend. So logically, this suggests that external factors such as bearish market speculation are currently responsible for driving XRP's price downward. And it's not that XRP is not a good, cryptocurrency, or Ripple's not a good company. It just basically means that once market sentiment flips bullish, XRP is going to be one of the main cryptocurrencies that paves the trail for the next bull run. So if you are bullish on crypto, you have to be bullish on XRP. If you are not bullish on XRP, then virtually no altcoin is going to see liquidity growth, and the only liquidity growth they would see would be a temporary pump, right? When the tides rise, so do all boats, but XRP is that boat, is that ship that is going to lead the brigade to the beaches of the moon. So Michael Burry, a big short, just betted $1.6 billion on a stock market crash. Now, black swan event. What would be the black swan event for the stock market? Now, one thing that's interesting is if we compare where we are right now, and we go all the way back to 1929, and I were to draw the Fibonacci retracement from, 1919 down to 1921, we saw the stock market drop about 45%. 45%. Now that was a pretty big drop. Then if I go back to 2000, what did the stock market drop? Well, the stock market dropped, like 40%, somewhere around there. Then we saw another crash of 2007. We saw a drop of 50%. So the crash of 2007 to 2009, 2 years, similar to the crash of 1919 to 1921, 2 years, brought the Dow Jones Industrial Average back to the 200 moving average right here. Now, very interestingly enough, we went below the 200 moving average back in 2009. We went below the 200 moving average, the SMA, in 1921. And then we saw a breakout from this point right here, and we saw about a 500% rally in the stock market. Now we saw a breakout right here, and we saw almost a 500% rally in the stock market would put the Dow Jones Industrial Average at about, 38,000, 39,000 on the Dow Jones Industrial Average. And we saw a parabolic blow off top above the full extension of a 4.236. And so a 4.236 would be about 40,000 for the Dow Jones Industrial Average. So could we push higher in the short term? Yeah, absolutely. Or could this be the dead cat bounce that's taking place for the rally in the stock market? And very similar to the crypto peak for Bitcoin, how it was a dead cat bounce, but the dead cat bounce was higher than the previous high. And on Google Trends, the interest actually showed that people were getting out of the crypto market when Bitcoin peaked at the all-time high. And they were more interested when Bitcoin had its first peak back in 2021. So could that be the same thing as what's happening in the Dow Jones, where the technical peak was right here when everyone was excited in crypto, everyone was fired up, and that was right when the markets were crashing, November of 2021, December, and then we saw the markets drop down. And this bounce that's taking place right now that could be higher from the high leading it to a 4.236 would be the peak for the stock market. And then we just see absolute market destruction leading into Sears coming back down to the 200 moving average and potentially even breaking lower than that. Because as you can see in 1932, we saw the crash take out the lows of 1921. So could something like that happen where this crash coming for the stock market, it's not a matter of if, it's when and how large? That's the question that you need to have on your mind. When and how large? Could we see this crash take out the lows that happened back from 2009? Could something like that happen? And could this be the greatest shift in human history? And could the stock market just ultimately never recover until 2050? The next 20 years, the gains that we see in the stock market is fueled by massive QE, quantitative easing, monetary print orders, years of low interest rates. And now that the Fed is raising the interest rates, we're not going to see gains that we saw prior to 2021 ever again in the stock market. And the shift in money as it comes out of the stock market through some type of black swan event, like what would cause this? It would be a closure, an economic closure, some catastrophe that's much bigger than COVID. That's what would cause this. And banking collapses, congregation of regional banks into central banks and CBDCs, complete shift to digital currencies, complete shift to CBDCs, complete monitoring, control over your money through the BIS, Bank for International Settlements, and a complete destruction of the dollar. Now, where would that money move and how would that affect the crypto market? That's a question that is up for debate because Burry's fund, Michael Burry, he's known from The Big Short. He's the investor who became famous for correctly predicting the collapse of the housing market in 2008. He bet more than $1.6 billion on the Wall Street crash. So this guy is not just a gambler. To have over $1.6 billion, you have to be more intelligent than the average Vegas blackjack player here, okay? You have to really know what you're doing in the market. So he is making a bearish bet against the S&P 500 and the NASDAQ 100. According to the Security Exchange Commission, released Monday, Burry's fund, Cyan Asset Management, bought $866 million in put options. Now, put options is the right to sell an asset at a particular price against a fund that tracks the S&P 500 and $739 million in put options against a fund that tracks the NASDAQ 100. Now, to put that into perspective for you guys, Burry is using more than 90% of his portfolio to bet on a market crash. 90%. This is not some 5%, only risk 5% of what you can afford to lose in one particular, investment or decision. This is 90% of his portfolio, according to filings. Now, Burry appears to have been wavering bullish and bearish on his stock picks this year. So could he be wrong? Absolutely. Could he be right? Absolutely. In January, he tweeted a cryptic message to his 1.4 million followers saying, sell. Now, it's not cryptic. It's just literally telling what he's doing, what everyone should do. Not financial advice, but at the end of March, he backtracked and said, I was wrong to say sell. Now, there's nuanced points here. So does that mean that he's wrong right now? Absolutely, because, in March, we saw the markets rally more. But in the micro, he was wrong. But in the macro, could this crash be the crash of leading to 2026, 2027? We're still 3 years out. So I'm not saying that this is going to happen tomorrow because I'm on the monthly candles, right? And I'm looking at the Dow Jones Industrial Average. Now I can pull up the S&P 500 and I can pull up what he's looking at, but the Dow Jones Industrial Average, another thing to look at, guys, on where the money is going to move is if this were to happen, gold and silver would see one of the biggest bull runs of all time. Now, this is a chart that we need to look at that would prove this. This is a 100-year historical chart called the Dow to gold ratio. Now, this chart tracks the ratio of the Dow Jones Industrial Average to the price of gold. And the number tells you how many ounces of gold it would take to buy the Dow at any given month. I've talked about this in previous videos. And previous cycle lows have been 1.94 ounces in February of 1933 and 1.29 ounces of January of 1980. Now, here's one thing that's interesting. This is all you need to know from this. Anything above 15 means that smart investors, I'm not telling you what to do, but smart investors are getting out of the stock market and into precious metals. Now, they could argue that crypto is another shift too, that money's going to move. So crypto could positively benefit from a stock market crash. It could completely decouple. That's what people are debating. I'm curious on your guys' thoughts. Do you guys feel that crypto would decouple, or do you think a stock market crash would also lead to a crypto market crash as well too? What are your thoughts there? But ultimately, anything above 15 is bullish for precious metals, bearish for stocks. Anything below 5 is get out. People are getting out of precious metals and into the stock market. Now, it doesn't necessarily mean that you can't make money in the stock market if it's above, 15, because if I look at the Dow Jones Industrial Average right here, and we see when were we above 15 in the past? Well, if I go back to 1996. Actually, let's just go back to 2015. So when we passed 15 on the Dow to gold ratio, it was April of 2015, and we pretty much stayed above that. And so if I go back to the Dow and I look at 2015, well, we've rallied since 2015 in the Dow. We went from 17,000 to where we are now at about 34,000. So we've seen some gains, but gold has outperformed the Dow, so it's relative. It doesn't mean that you won't make money. If you were in the stock market in 2015, you'd still be up. Like, let's say you bought in September of 2015, you'd be up over 100%. But if you bought gold in 2015, you would be doing a lot better. And if we look at the chart right here, for gold back in 2015, gold was around $1,000 per ounce. So instead of buying gold at $2,000 an ounce, you'd have got gold at $1,000 an ounce back then. And ultimately, back in 2001. So when the stock market, has crashed, and we saw back here in 2000 and where were we in 2001? 2001 we were at 11,000 on the Dow, and actually that was the year 2000. And in the year 2000 on gold, where were we priced at? We were all the way down here at $200 an ounce. So while the Dow was rallying, gold was seeing a sell-off. And then what happened? What happened right here on the left-hand side of the chart? We saw the 50 moving average cross the 200 moving average, and we saw gold rip on out of here. What caused this? Well, if you guys remember correctly, the crash of the dot-com bubble, then followed by massive monetary print orders, the dot-com boom being done, people needing to put money from something. So people are moving money out of these tech companies and these dot-com companies that were just bubbles, similar to the crypto company, and they were crypto companies, and they were pouring that back into gold. And simultaneously in 2003 and 2004, there were talks of a gold ETF being approved. Then once the first gold ETF was approved, roughly right around here, then we saw, right after this period, we saw gold surge even more. And then 2008, the crash of 2007 to 2009, we saw gold dip from $1,000 per ounce right here, and it dropped all the way down the 50 moving average. It dropped 33%. So gold was hit. Definitely gold was hit in the short term, but gold recovered quickly out of this, and then it went from $680 or $700 an ounce all the way upwards of $1,900 per ounce. So right here, June of 2001, gold was $255. By August of 2011, gold had rallied 650% to $1,900 per ounce. Now, where were we on the Dow to gold ratio on June of 2001? Right about here, okay? May, June of 2001. Let's go back here and look at this. So 2001, we were at right about here, 41, roughly give or take a few percentage points, 36 to 41. We were at the highest the Dow to gold ratio has ever been, meaning over 15 is bullish for precious metals, bearish for stocks. Now, to prove that on the chart, that was that was one of the most bullish times to buy gold, other than times in the past, right? Going all the way back to 1976 and before then. But within the past 20 to 30 years, $200 an ounce, super bullish for gold. So as you diversify your portfolio, obviously crypto, you see bigger gains for crypto, but you also pay the price of volatility. Volatility is the price you pay for opportunity. And so historically, yes, Bitcoin and Ethereum, even XRP can lose 70 to 99% of its value during bear markets. But over time, over the past decade plus, crypto is significantly up more than the US dollar. And so if the stock market crashes and we see pandemic part 2 for Sears, and we see a dead cat bounce, on the Dow Jones Industrial Average, on the S&P 500. And if Michael Burry is right, what are you doing to prepare? Because just sitting back, watching Netflix, not doing anything to prepare is not a good superior tactical plan. You have to have a superior tactical plan, and that's why we're backing up our truck all the way to the bank, grabbing the bags, packing them and stacking them, leaving no bags left behind because the spending power of the dollar is going down in value. That's the truth. And blockchain technology, cryptocurrencies, specifically XRP, I believe is going to lead the next bull run. That's the truth. And together, we're all going camping on the beaches of the moon. I will see you on the next video. I will see you on bullrunners.com. As always, you know what to do. Stay bullish.